then if you look at the average investor, they're getting 2.9% return because they're diversified. As I've said before, diversification is selling the winner to buy the loser. Your consumer home is doing a little bit better. Bonds are a little bit better, and the diversified portfolio underperforms inflation. If you look at the S&P index, it's about the same, right? You're getting 7.5% return against about a 7 to 8% inflation rate. But all you're doing is just keeping up with asset inflation. You're not beating it. The only asset classes that beat it by a little bit, REITs, real estate investment trust, it's basically real estate portfolios. And maybe you might beat it by a percentage, but there really aren't any winners here. What this tells you is that if you own the most desirable property in the middle of London or Paris or New York City, you might be able to slightly beat monetary inflation, and most investment ideas don't work. And so if you want to preserve your wealth, an investor has to convert their currency into assets. And, currency, CNY, euros, dollars, ARS, bolivars, real, etc. You have to convert them into assets that are scarce, desirable. 460 exahash is all the computer power anybody else can muster. But that's not the only thing. Bitcoin's secured by economic power. And if you look at the 4-year simple moving average of Bitcoin, and then you look at the supply, you conclude about $560 billion have been invested in, the M is wrong, it's $560 billion have been invested in this network. And so that money secures the network. And you got to expect that the people that invested the $560 billion are going to protect it using all of their resources and influence. And then finally, you've got about 220 million holders. 220 million people have some ownership of Bitcoin. And those 220 million people, they're also going to use their political influence to protect the network. And so when you're investing in Bitcoin, you're protected by 4 types of power. Now, how does this compare to everything else you can buy on that chart? And, it's like owning a building, but if you're going to own a building in Buenos Aires, why wouldn't you have a building that you could teleport to London, Paris, or Japan when you needed to and sell it? It's just a much better idea. So Bitcoin is better property than any kind of physical property. But Bitcoin's also the apex technology, right? It's a bank in cyberspace run by incorruptible software. It's open to everyone on Earth. So you could think of it as digital finance. And the top competitor in technology is Apple. Apple's the most valuable company in the world, but right behind it is Google and Microsoft and Amazon. And big tech is an obvious good idea. But what if I could actually have a digital monopoly that's global, that everybody wants, but without the management team, without the employees? Right now people want to unionize Amazon. They're talking about unionizing Tesla. Well, you can't unionize a company that has no employees, that is no company. The management's never going to screw up if there is no management. You've got corporate taxes and tariffs and product cycles. We're on the iPhone 15. What about the iPhone 37? Will that be the one that you want? Bitcoin, on the other hand, is digital. You can self-custody it. It appreciates much faster than fiat, and it allows you to escape the local currency risk. So, and it's the longest duration asset. A bond could be 30 years, but Bitcoin is forever. Bitcoin's a 1,000-year asset. I mean, it doesn't expire. Companies don't last 1,000 years. Buildings don't last 1,000 years. I mean, I guess the closest thing to something that might last 1,000 years is a bar of gold, but gold isn't scarce. When the Spanish came to the New World and the conquistadors stole all the gold from South America, they brought it back to Spain. They created massive hyperinflation and tripled the supply of everything and crashed their own economy in Spain and the rest of Europe. So there's always been inflation, even in gold on the gold standard, because it's not scarce. And now a lot of talk about the ETFs coming. Bitcoin's going to be the apex ETF. You could think of it as a global monetary network. Everybody else is zero. There is no return. Everybody's failing. 99% of the companies are failing to deliver any shareholder return. There's only a handful that are succeeding. And if you want to know something more blood-curdling, it's 7 stocks out of 7,000 publicly traded companies that are returning the majority of the returns. That's 1 in 1,000. At 99.9% of these companies, they're not beating inflation. You know, you might think that somehow you're doing a lot of brilliant things, and they're working very hard, but they're working very hard rolling a rock up a hill, and the hill is monetary inflation. And this is the big idea in corporate finance. If you're a stock investor or an equity investor, most companies cannot grow their cash flows faster than the monetary inflation rate of 7 or 8%. So they have to rely upon expensive buybacks. They have to buy their stock back. They have to dividend out their cash flows. They do acquisitions to try to get more growth non-organically, or they load up on debt and they leverage up their balance sheet and buy back their shares with debt so that they can get that shareholder EPS to go up faster than the 7% number, because it's not in the real world and it doesn't have physical nexus or political nexus. But also, Bitcoin has all the virtues of a pure crypto decentralized network. It's cybernetic, digital. It's immaculate in its conception. It's immortal. It's incorruptible. It's global. It's indestructible. And so you can imagine as a technology idea or an investment idea, you're just always going to have an advantage over mortals doing things in the real world. And so your trading strategy, your investment strategy, your stock picking strategy, your diversification strategy, they just don't work. There is one winning strategy that's going to work. And the one winning strategy is hold the apex asset for a long period of time. And so Bitcoin is that apex asset. That's how you beat the market. The S&P index will look like it's benefiting, but at the end of the day, it'll just keep up. Gold will actually underperform because it's commodity and they're producing more of it. And then any kind of cash or cash derivatives or bonds, they're going to destroy value. If you're going to do great things, you need to look out 3 generations. It's very clarifying. And all of the mistakes, all the fear and anxiety that makes you do stupid things or makes you do knee-jerk things that destroy wealth and create chaos, they come about because people are thinking about 3 months or 3 weeks or 3 days or 3 years. And so my advice is for you when you're thinking about more than 4 years out, think about yourself, your life, your children, your children's children. Now, if your family or your company had $1 million, a lot of money, I grant you, but if you had $1 million, if you invested it in cash at a 7.5%, or 7% degradation, you're going to end up with $900 worth of value left after 100 years. Your money's going away. You're going to destroy all your wealth. If you invest $1 million in bonds at a 5%